Hi there, Serial Trader here. I'm going to have a look at the major US indices, and we'll start off with the chart here on SPX. Now, since the last update, kind of debating that we needed some sort of wave 4 pullback, debating whether it was either in place here or that we had a little bit more to go. So we did get a bounce up from that level, but it looked like it was just a B wave bounce, and now I think we've just done a more I don't know if you want to call it more satisfying ABC down, more time consumed, more price retraced. And if we just do a simple retracement of the proposed third wave here, I think we fell just around that 38.2% retracement. So that's exactly, the most common wave 4 retracement level. And then also, I think we did something like this. Roughly AC equality, A off of B. If we take the equality relationship, I think we came around that area as well, then reacted off of that. Yeah, so just stabbed through that, but largely staying above that and the 38.2% retracement. Now, one thing, given the magnitude and duration of this pullback, I would propose that perhaps we're not still subdividing this larger wave 3, that was probably the larger wave 3, and this is actually the wave 4 that will pair up with this wave 2. And you can see we didn't do any 4-1 overlap, so that's a very valid interpretation still, whether you want to put the wave 1 here, or if you want to call it a different wave count for the wave 1 and the 2, and you would put the wave 1 here, for instance. Either way, we didn't touch either of those levels, so still safely not doing 4-1 overlap, however you want to look at it, at least as of right now. So that that would suggest that the next move of consequence here should be pretty soon here, a fifth wave up, possibly close to the prior all-time high. And let's just do some targeting. And you know what? I can just delete some of this stuff to clean the chart up. Delete these lines, resistance levels, even get rid of that fib retracement and that fib extension. Okay, that's a little cleaner. Okay, so if we are dealing with just a simple 1, 2, 3, 4, now seeking the 5, and assuming that we already have the fourth wave completed here, now it looks like there's a good, you did a double bottom here at 44.50, basically a double bottom. If we go on the shorter term time frame, like the, 30-minute, you can make the case we're working a little 1-2 sequence perhaps. So the early stages of a new uptrend forming, but definitely need a little more, a little bit more upside to confirm that. But back to the daily. So let's just run the assumption that the low's already in place here at 44.50, which I think is a pretty good chance that it is. So we'll do some targets to the upside. So let's just use this as the length of wave 1 off of the bottom of wave 4. We can also use this slightly different way of counting wave 1, which would just be slightly shorter off of the bottom of wave 4. So that gives us some targets, let's call it in the the mid 4700s. Then we have the entire distance of waves 1 through 3 off of 4, and then we have the 618 relationship as a common objective for that. So that gets up that gets us up to 47.7304. And then we also have the range expansion of the fourth wave, or the reverse fib extension, however you want to term it, and the 1.32 and the 2. So 1.32 gets us to 47.08, so again over 4700, and 2 would actually get us to 48.24, which is, what was the old high? 48.18. So that gets you right back up to the all-time high if you do the, basically double the range of this proposed fourth wave, which isn't that unrealistic. It's certainly an achievable extension target. So yeah, if this goes according to plan here, towards the end of April or even a little bit into May, we may be very well talking about new all-time highs here, at least on SPX. So just something to be aware of. that is currently what I'm seeing. And that would actually be 1 degree there. But yeah, I'll delete the subdivisions. And I think this kind of, it's pretty self-explanatory. Overall, we got a down, up, down, a three-way move down for this larger wave 4. And so far we have a 1, 2, 3, 4. And so far you can validate it as a 4 as long as it doesn't go down too much more to take out the wave 1 high. But as long as we kind of hold firm here, we're seeking the 5th wave up to, you know, significantly higher highs. Probably, I don't know, several hundred SPX points by the looks of it, just to be proportional. So I think that's really the play right now is, you know, getting on in the short-term time frame. And I'd say you can enter a long trade here. And if you want to be aggressive, use this recent low of 44.50 as your stop. And you're seeking somewhere in the 4700s or higher. So that's not a bad trade setup from that standpoint. And I'm certainly long positioned for that myself. But once we do get this, well, if and when we do get this 5th wave move up to, you know, near the prior highs or even possibly exceed them, at that point I'll be taking, you know, some significant risk off. And at the very least, waiting for a pullback. Because if we go to the weekly chart here, so this could be 5 up, and that could complete that larger 5th. We could just make a, you know, modest or marginal new high above that prior 3rd wave high, above that 48.18 high. And who's to say that isn't, you know, a short, weak 5th wave and the bottom finally falls out like so many have been anticipating. Now, what I would tend to lean on, given how much longer wave 1 and wave 3 would be in not only magnitude but duration, I would suspect that would just be, you know, 5 up for the 1, then we get the 2, 3, 4, 5, something like this, right, of that larger 5. I guess have to drop all the degrees down to make that work. But you see what I'm getting at. So I think we're going to get 5 up here and possibly, you know, marginally exceed this high. But I would initially at least suspect that it's just 1 of that larger 5. But the way that would really be invalidated is, how do we come down here? Do we just correct down in a typical 3-wave decline for, you know, wave 2? Or do we really start tanking and getting way too close to the low here from February? If that was the case, then I would be more inclined to suspect that it's 5 up and done for that larger 5, and we just completed something very substantial on multiple time frames, including, you know, all the way up from the 2009 lows and maybe even more than that. But that's a conversation for the future. For now, working with what we got, we have an incomplete sequence to the upside. Looks like we need another impulse wave up to finish a 5-wave move, right? So whatever that 5-wave move ends up being or ends up finishing, it's not that important from a, you know, positional standpoint where we stand right now. It looks like the thing to do right now is have some long positions on. So that's really the bottom line there. Okay, well, that's enough of that chart. Now we'll go over to Thinkorswim. So what do we have here on the SPX daily chart? So we're sitting right around that 20-day simple moving average, around the 200-day simple moving average. The 50-day is starting to curl up. The 200-day is still slightly sloped to the upside. So as far as the moving average configuration, still looks reasonably bullish. We actually did do a bullish engulfing candlestick on Thursday. That engulfed the real body of Wednesday's candle. And we didn't really confirm or invalidate that candle today, since we just basically had an inside day, just a doji star, indecisive. We didn't break the prior day's high, and we didn't break the prior day's low. In fact, we just closed somewhere in the middle of the range. So today was just kind of a chop fest. Nothing of significance directionally. We're almost in the oversold condition on this daily oscillator. And what do we have on the weekly chart? Anything candlestick related to remark on here? Okay, well, we're obviously coming off this lower condition here on the weekly stochastic. We're nowhere near overbought. So there's that. We are holding above that 50-week simple moving average quite nicely. And yeah, not much else to really remark on other than that. Interestingly, this might be a technical, I wouldn't call it a great one, but technically speaking, this might be a bearish engulfing candlestick on the weekly. So let's see where this candle closed. Prior week's candle closed at 45.86. This candle opened at 45.47.97, and we did close below the open of that candle. So yes, we do technically have what I would consider a fairly unconvincing or weak weekly bearish engulfing candlestick, but nonetheless worth pointing out. If we do unexpectedly break down here, then that could have been considered a warning on the weekly. Although I'm not embracing that view just yet. I do think we are highly likely here to have another leg up before much else happens. Okay, and we'll go to the Dow Jones Industrial Average. So the Dow looks quite bullish off of its equivalent pullback here. So I think the Dow, same as the S&P, we got the 1, the 2, and they got the 1, 2, 3, 4, 5 of the 3. ABC down for 4. Didn't overlap with the 1 here. Might have come close, but we technically did not overlap with the 1. And of course, depending where you put the 1, whether it's here or here, but even here, we didn't actually overlap there. And now we did a bullish engulfing candlestick on the Dow on Thursday, and it actually was fairly nicely confirmed here on Friday with another reasonably strong up day and closing above the daily T line. We're above the 20-day simple moving average. We're above the 50. It's just the 200 up here that's lurking, but that'll probably get taken out pretty easily as we progress to the upside here on the Dow. Okay, weekly, anything to remark on there? Basically just looks like a weekly doji star, kind of an indecisive week similar to last week. So nothing remarkable about that. Okay, we'll go over to the Nasdaq Composite. So Nasdaq Composite, I think we've done the initial impulse wave off the bottom, and this is a ABC down, probably near completion, although the Nasdaq is notably weaker than the other two indices we looked at. But we're still, you know, in between the 38.2 and the 50% retracement of this initial leg up off the what actually ended up being the March low here on the Nasdaq Composite. Okay, and starting to get into oversold condition on the daily oscillator here. Weekly chart on the Nasdaq. That is a weekly bearish engulfing candlestick, and it engulfs 2 prior weeks' real bodies. So definitely a bit more of a bearish pattern here on the Nasdaq weekly. So again, if we do start breaking down aggressively next week, this was the warning for that to happen. And certainly long positions need to be quickly abandoned if that is the case. And we are doing something more bearish to the downside again. Although again, not currently in favor of that view myself. Of course, always ready to change my mind if necessary. Okay, Nasdaq 100. Similar to the composite. Did the initial impulse wave up off that March low, which was really just a marginal new low below the February low. Barely took it out. But what do we do for retracement? Again, in between the 38.2 and the 50% retracement on the Nasdaq 100. And it looks like we are seeing basically around that 50-day simple moving average. Daily oscillators almost oversold there on the Nasdaq 100 as well. Weekly, let's see what we got here on the weekly. Just a moment there. Okay, well, if I can zoom in here, that'd be great. I can always just do it manually if the cursor decides to stop working for whatever reason. Okay, yeah, so Nasdaq 100, I think it's just doing a weekly bearish engulfing as well. It's so essentially the exact same picture as the Nasdaq Composite. Okay, so that's that. Looking at the VIX. VIX had a bit of a bounce up with our little pullback, but really nothing substantial. And looks to be possibly getting ready to fade down again. And that's obviously good for stocks to go up if the VIX is fading down. What else? VIX VVIX tool. Okay, so on the VIX VVIX tool, I think we're on the cusp of a potential buy signal. So here we made the local high on VVIX and VIX. Now SPX made a low there, but it actually made a slightly. Actually, I don't think it made a lower low. It basically made a double bottom. So you do have a bit of a divergence here. So SPX, if I can just get this where I want it. SPX went down and basically made a double bottom. But at the same time, from the same reference point, VVIX made significantly lower highs. And VIX made significantly lower highs. So that's a bullish divergence. So VVIX and VIX were not confirming SPX basically making a new low or testing its low by making or testing their prior high. They came nowhere near it. So that's a bullish divergence between VIX, VVIX, and SPX. And at the same time, we're back below the red moving average on VVIX. So the final step for a full-on buy signal is to get back above the blue moving average on SPX, which is currently sitting around, let's call it 45.15 or so, which lines up basically with the high of the last 2 days, basically, right around that level. All right, well, that's probably all there is to remark on this week. So bottom line, I think that the wave 4 is either in place or very close to being in place, and the next move to be looking out for is this proposed wave 5 up. And then if and when we can catch a nice swing up in that, I think that'll be time to take some risk off the table and reassess, and maybe even consider putting on some more bearish-oriented positions. All right, it's good for now. Serial Trader signing off.